How's it going, everybody? My name is Antonio, and I'm on the barbecue today on November 22 with Rick Trotman, CEO of Barksdale Resources, a precious and base metals exploration company with 6 projects, 5 in southern Arizona and 1 in northern Mexico. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy or sell anything. Instead, it will be just a casual talk between two people on the internet. And if your mom didn't tell you, you're not supposed to blindly trust people on the internet. So for as far as you as a listener or a viewer are concerned, this is going to be, again, just a conversation, one that's general and impersonal in nature, and definitely not one that you want to use as independent research, because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. I'd suggest you take the minute to pause the video right now, read the full warning that is on your screen right now, because the mineral exploration, development, and mining industry is among the highest risk industries out there. So in the end, wear your big boy panties, take your own decisions, consult a professional investment advisor. That all said, Barksdale is listed on the TSX Ventures Exchange under the ticker symbol BRO, so BRO, where an average of about 50,000 shares trade each day, with a market cap of about 46 million Canadian dollars and about 81 million shares outstanding. That makes this a 57 cents stock. That's too much S's to say in one sentence, but so it's a 57-cent stock with a 52-week high of 95 cents and a 52-week low of about 40 cents. There are roughly 8 million options and 5.5 million warrants for a total number of 95 million fully diluted shares. And a large part of those shares is in the hands of insiders, investment funds, high net worth individuals, and other companies, including Tech Resources and Cisco. High net worth individuals, that'd be your Eric Sprott, for example, and investment funds. You can think about Willem Middelkoop's Commodity Discovery Fund, as well as Crescat Capital. At the end of June this year, of course, the company had about $4.5 million in cash against account payables of about $300,000 and a small part of a lease liability. But the big part of the total liabilities is made up of about $1.5 million in a 55 cents per share convertible debt, which matures at the end of December this year and is thus in the money right now. As I said at the beginning, Barksdale has 6 projects, 5 in Arizona and 1 in Mexico. Focus right now, though, is one of those projects in Arizona. It's called the Sunnyside Project. There's 2 drill rigs that are turning as we speak for a planned 16,000 meters of diamond drilling, and they're looking to intersect a skarn, which the company believes is related to the hydrothermal fluids that are coming from a classically zoned copper porphyry, which, besides copper, could also contain zinc, lead, and silver. Project is located about an hour and a half drive from Tucson, which is not only a Hyundai car model, but it's also a fairly large city of cowboys and great Mexican food. Sunnyside is not a huge project itself. It's about 21 square kilometers, but it does sit right next door to South 32's Hermosa property, which is a 153 million tons of 3.5% zinc. There is nearly 4% lead, if I'm not mistaken, and nearly 2.5 ounces of silver per ton. And they got that project in a $2.1 billion cash acquisition about 5 years ago. And so mineralization on the Sunnyside side of the project is believed to be the same one as the mineralization driving those grades at Hermosa. That belief is not just a belief. It's based on historic drill results that were heavy on zinc, heavy on silver. And although, again, those are historic grades, so they're not NI 43-101 compliant, but they are there. And so that's the Sunnyside project. And and again, that's the focus of what we're going to be talking here today. But then if we moved closer to Tucson, about a half an hour from it, there lies the San Antonio project, which, besides having the best name possible, is a little bit larger than the Sunnyside, and it represents a shallow copper porphyry target, which Tech Resources actually used to own. They did quite a lot of work on it, up to the geophysics, and I believe they still have a 1.5% NSR on it. Next to those two, there is the Four Metals project. That's another conceptual copper porphyry. There's Goat Canyon. That's another potential copper porphyry, close to Sunnyside, actually. And then finally, there's Canelo. That's an early stage, well, you guessed it, copper porphyry and skarn / CRD. CRDs are kind of hot right now, actually. Potential project. which is also close to Sunnyside, by the way. So those are your 5 projects in Arizona. But a few hundred kilometers south from Arizona lies the San Javier property, which houses 4 projects. I said it's a 1 project in Mexico, but it's actually 1 property in Mexico, which houses 4 projects to be specific. And one of those projects on that property in Mexico has been drilled extensively for over 30,000 meters in the past. And there's also a historic resource on it that Barksdale believes they can grow through more exploration, because these 30,000 meters were again concentrated, as I said, on just one of those 4 projects. So the property is largely underexplored. Mineralization on here is said to be part of an IOCG system. Those are typically large. They're also large contributors to the global stock of iron, copper, and gold worldwide. So Barksdale believes that it's been underexplored and should be looked into more in depth. Suffice it to say, they have a whole lot going on, so there's a lot to talk about here, which means that I should get to shutting up now and welcoming the CEO. Rick, thank you for investing your time with me, sir.
Yeah, no worries. Thanks for that lovely but long introduction. It was great.
Pleasure is of course mutual. What am I missing or getting wrong here in the overview of the company?
I don't think you got much wrong. The town's called Tucson instead of Tucson.
Okay.
From that, I think you're spot on.
Okay. How do you pronounce it?
Tucson.
Okay. I don't know. I'm just used to. I think I pronounce it in Dutch the most, because I speak another language at home. I speak the second language in my real life, and then third language and so it gets confusing. But so Tucson. Okay, fair enough. It's actually a Hyundai model too, which is kind of funny. But okay, let's maybe start off to talk about drilling on the Sunnyside project, which is happening right now. That's a big thing, right? To talk about. Maybe we can start off with a timeline here. 16,000 meters. When is that going to be done, and when are we going to see the assay results from it?
Yeah, so when it'll be done is based kind of a bit on drilling rates. So how fast we drill, and then ultimately how many drill holes do we drill from surface versus how many wedge holes that we do. And a wedge hole being a kind of a splinter off of a main hole. So it stops you from having to re-drill that first 700, 800 meters over and over and over again to get additional pierce points. But it means that you're doing these wedges and they take a bit of time. So it just really depends on how the program plays out as far as penetration rates and things of that nature. So I would say Q1 of next year we will have half of the program done, and I would suspect the summer of next year we'll have the entire program complete. So kind of in that maybe August timeframe, and these are tentative, so take them with a bit of a grain of salt. It might be a little quicker, it might be a little longer.
Right. So we're about 9 to 12 months from assay results now.
No. That's
having all the assay results out.
16. Well, the assay results will take even longer than that to get the final ones, right? This is just to complete the actual 16,000 meters of drilling.
Okay.
The assay results will actually come along the way. So the way that we do things is that, we obviously get drill core from the drill rigs every day. We take that, we log it, we cut it, we sample it, and then the intervals that look very interesting, kind of visually mineralized, we send those out to the assay lab in batches. And so the frequency of those batches will determine the frequency of assay results getting out to market. So for instance, we have 3 different batches of assays out to the lab right now. And so getting those results will just kind of depend on how frequently we send them to the lab and then what the lab turnaround times are, which this time of year for us would be anywhere between 3 and 5 weeks, I would guess.
Okay, that's not too bad. I've heard 6 to 9 weeks too recently.
It just depends on where you are. So, for instance, a lot of the folks that are up north in Canada, kind of those seasonal plays, they send a boatload of rocks down south, and then they swamp the prep labs. And so then those prep labs take a very long time to get the samples crushed down to send the pulps ultimately to the assay labs. And so luckily our prep lab is in Tucson, and I think it will take about a week to get everything crushed and sent up to Vancouver, where the assay laboratory is located. So it's not too long. And then we have small batches of samples, depending on obviously how many we send, but they can get slotted in with other batches. So if you have a project up north and you get, several thousand samples that are all going in, they try to run those kind of in one batch, right? Or at least get them going. Ours, they can sneak in between other batches where they need to kind of fill the trays, so to speak. So it's a little easier to get slotted in.
Right. How much are you paying for meter all in, by the way?
Yeah, that's another complicated formula. So we've got a couple of different input costs there. I'll just walk you through them because then it'll make more sense. So our drilling costs, they're in US dollars. And so it's a graduated scale. So from surface to 500 feet, it's one rate. And then every 500 feet deeper that we get, the rate goes up. And so I want to say it's something on the order of, and I'm going to get these numbers wrong, but something on the order of maybe $50 a foot from the surface to 500 feet. And that escalates down a couple of dollars every 500 feet to, I want to say, maybe a little less than $100 a foot US when you're down below 5,500 feet. So that would be something on the order of 1,700 meters deep. So the deeper you go, obviously, the more it costs per meter to drill. Okay. And so that's your direct costs.
So the direct drill costs are about what, 150 a meter? US.
Yeah, it could be around there. It could be a little less, a little more, just depending on the depth. Then you get to add in some other costs for drilling, drill bits. If they do any conditioning of the hole, those are kind of hourly charges. And then you've got your assay costs, depending on how frequently you assay. You throw those costs in. We haul water. And so that's a decent charge to haul water to the drill rigs. It's a couple of bucks a foot. And then on top of that, you have the geology and other types of costs that go into that program. So I would say all in all, something on the order of $200 to $300 a meter. On average, if you're down deeper and doing wedging and directional drilling, that could probably go up to $400 or even $500 per meter down deep on a wedge where you're motoring. But on average, I would say we're probably going to be program wide, something on the order of 250 to 300 a meter.
Right. Okay. And that's assays. So is that all in? Do you include assays in that?
That should be an all in number.
Okay. Right. Fine. No, that's fine.
And again, that also depends on how many wedges you're doing, how many holes from surface you're doing. Because remember that those shallower holes, they cost, the shallower portions of the hole cost less to drill than the deeper portions, but you're drilling a whole lot of rock versus a little bit of rock. So it's a complicated web that we weave.
Do you have an idea now, or is that sort of a see as you go type of thing as to how many wedges are you going to drill versus how many holes from surface?
It's a see as we go, because ultimately what we're going to do is finish our pilot holes and then complete at least one or two wedges. And then based on how long it took us to do the pilot hole and what the cost of that is versus the wedge and how long that takes us and how much it costs us, we can do the appropriate comparison to see a time versus money exercise to see what works.
Okay. Yeah. Okay, that's right. You recently came across a 20-meter void in your drilling there. So you started at the end of September, and so that's also potentially slowing your timeline down. I think that was well covered generally in media, but also in your own news release. But if you want to expand a little bit on this void and just maybe voids in general too, that could be helpful. Like how often do we see them geologically speaking broadly, but also within this type of systems, and what can they really mean for this type of systems?
Sure. You hit voids all the time in drilling. Typically, they tend to be pretty small. So depending on the type of rock that you're drilling through, you can hit a void, around a fault zone, or in this case, we hit it in carbonate rocks. And carbonate rocks are, they tend to dissolve. with different types of fluids, so particularly acidic fluids. And so what happens is in those rocks, and you can think of those cenote type caves in Mexico or the big giant caves in Malaysia, all the giant cave networks in the world, typically in limestones, right? Carbonate rocks, because they dissolve, with water, particularly acidic water. And so it's very common to see. We were expecting voids, or I should call them dissolution caverns, or something cooler than a void. I think void tends to scare people. But anyway, we expected to see them. We didn't expect to see a 20-meter one. That was kind of a doozy. We were expecting to see kind of 1-meter type voids, right? Just these zones where fluids pump through and they over time just kind of chew away at the rock and leave an open space. And if you think about it, that's ultimately what's necessary to create some of this mineralization, particularly in a CRD environment, right? You're looking to dissolve that carbonate. And if you have the right type of fluid going through there, as you dissolve the carbonate, you start to neutralize that acid, and that process dumps out the metal that you're looking for. And that's how you precipitate the sphalerite, which is the zinc mineral, and the galena, which is the lead mineral, and the copper minerals, and so on and so forth. So that's the process. So, it's great from a geologic standpoint because it suggests that there's tons of fluids pumping around in there. It's just kind of pain in the ass from a drilling execution standpoint, because we hit it.
How much is that slowing it down by?
Well, we drilled, I think, the better part of 3 weeks on that wedge, including setting the wedge and getting that hole down. And then we had to start a new hole. So, if we had just started that new hole from surface rather than doing the wedge, we would have already been down through, probably finished that entire hole by now. But as it goes, we had to start back from the surface and drill back down. And so that takes time. And as we're seeing right now, the upper portion of that hole is going through a diatreme complex, which is like kind of an explosion breccia. And it's got these zones of clay and some other gunky stuff that's just, it's got some slow drilling in it. It's kind of frustrating. So ultimately, it's taking a bit more time than we expect to get down through that. But once we get down through that, it's nice because we'll be on carbonates, and then we'll be able to do the wedges, and we won't have to re-drill that component over and over and over again.
Right. What I'm asking you is also because I'm thinking about the tax loss selling season coming upon us, and then you having to keep sort of the market entertained in the meanwhile. And you'd previously mentioned, if I'm not mistaken, that you're maybe planning on releasing core pictures before the assay results. And that's kind of a mixed thing, maybe this year specifically after what's.
Well, sorry, let me clarify that. We won't put out pictures.
Okay.
We won't put out pictures or estimates on grades. What we would do is simply put out a press release saying that we've gone through massive sulfide zones and give a description of what they look like, where they are, and maybe a cross-section showing geologically what they mean, but with no inferences to grade and no core photos. I don't want the armchair geologists out there trying to pick what the grade might be, so to speak, right? The assays need to do the talking ultimately. But people do want to know that we are making progress, that we are seeing positive things. So when it comes to the massive sulfide zones, we are looking to put out those visual results. When it comes to other types of mineralization, we will not put out visuals, just because it's too hard for people to understand the context. So for instance, on the Sunnyside property, just holistically, there are many different types of mineralization. We tend to focus on the carbonate replacement style, the skarns and the mantos, but there's lots of mineralization. There's big porphyry. There's kind of this enrichment blanket near the surface, which is enriched in copper and silver. There are epithermal veins. There are mineralized dikes. There's all sorts of different things that breccia pipes, all sorts of different types of mineralization on that property. Everything but the massive sulfide is hard to visually represent without giving some of those great inferences, right? So if I say we hit a 10-meter zone of massive sulfides, people will probably know that that's pretty good, because if it's massive sulfide, that means it's, chocked full of the things that we anticipate to be economic. But if I said that we hit a 20-meter enrichment zone, I think the armchair geologists out there would start scouring the internet to see what typical grades are in an enrichment zone, rather than focusing on what it means holistically over the global program, or a breccia pipe, for instance. What's the difference between 0.2 copper and 1.2% copper when you're logging a drill hole? There's a lot to a geologist's eye when it comes to picking out grade. Some are really good and some just can't do it to save their life. So putting out grades and things like that, they can get a bit dangerous. And all you need to do is burn your investors by putting out something like that. They think it's fantastic. They buy up the stock, and then you put out the assays and it disappoints. That's not ultimately what we want to have happen with our shareholders. We want to give them the appropriate amount of guidance, but we don't want them to get frothy, so to speak, right?
That's right. So I must have misunderstood, because I was surprised by the thing that I learned, because we have a pretty good example this year. We don't necessarily have to name any names of two companies were actually influenced by it, releasing amazing drill core pictures, and someone saying, "Oh, this could be that," and then as the results coming on stock, so whatever. Yeah, but good point. Yeah, good point. What else is happening?
Because I could put out a picture that shows 4 centimeters, right? And is that representative of a 40-meter zone, right? Or do I put out photos of the 40-meter zone where the detail is not there, where you can really clearly see and understand? It just gets too difficult. Whereas, with a massive sulfide, that to be a massive sulfide, you have to be more than, say, 40-50% sulfide content within there. So it's going to grade. It's just a matter of what it grades. But with our system, it's more about latching into it and then following it and seeing how big it could get. The grades are going to be what the grades are, but what you want to find are these nice, thick structural zones where things blow out in terms of the size and hopefully the grade. And so putting out a press release saying that we hit a 6-meter zone versus a 60-meter zone of massive sulfides, those are going to give you, I think, the context that you need to understand how this drilling program is going holistically, thinking about the whole system.
Right. Well, I can tell you which zones you have to release, just if you let me know when you want to raise capital exactly.
Yeah, I'll show you the pictures. You tell me whether or not they look good enough, and then we'll put them out.
Yeah, exactly. What's happening in the meanwhile? You basically just, I mean, you're going around, you're going on conferences and so on and so forth. I'm gonna see you in Frankfurt, by the way, all over the place. But what is happening with the company in the meanwhile?
Yeah, so a couple of different fronts, right? So we have our stakeholder engagement, which we're always doing, right? So going to these conferences, talking to investors, doing these presentations and podcasts and things of that nature, just trying to get our word out, right? Because we don't want to be that tree that falls in the wood. No one's around to see it or hear it fall. So when we do get assays out to the market, we want all eyes to be on them, so to speak. So the more we can tell people about it and get our presence out there, the better. So that's a big component of what I do. Terry Ann Willicke, our VP of Communications, that's really her entire job. And so that's probably 30% of what I do, 25%. On top of that, there's the actual management of the company. So, staying up on the performance of, the program, performance of our different contractors, going through bills and all that type of stuff, that takes a fair bit of time as well. I go down to the project regularly to check on things and see how everything's going. And then there's the strategic component, right? Going through all the different scenario analysis on, if this happens, we do this. If that happens, we go this way, working on all those types of things. And then, you have to deal with the board of directors and, other things of that nature. So there's a couple of different balls that are all in the air at the same time that we're constantly juggling.
Okay. You mentioned a strategic there, and I know what you meant, but it's excuse me, at the same time it got me thinking about um a strategic partner, because you have quite a lot of projects that you can
Mhm.
cover. You cannot explore all of them on a junior's budget, no matter
Yeah.
how good your access to capital is, and so on and so forth. Would you be open, like, first of all, are you actively looking for a strategic, if you can tell me that? And would you be open if one were to come along?
Yeah, so we're not out advertising, but yeah, we have a couple of confidentiality agreements that are in place or getting put in place to look at some of our portfolio, um, just from a strategic standpoint to do exactly what you mentioned, potentially. And this all depends on the other group's appetites, as well as potentially what deals they may or may not, kind of put in front of us. But looking at advancing projects in a way where we get exposure, but we don't have that capital outlay while we're trying to drill Sunnyside, right? And those may or may not come through. They may or may not actually look good from a deal standpoint. So it's kind of a regular thing. I don't think there's anything too special about signing CAs and getting people in your data room. But it is a positive, right? People are interested in looking at what the potential is on these properties. And then we do have our project down in Mexico as well, right? We're working on a PEA. I've got a draft of that I have to read on the Bloody Plain, to go through and see, exactly what that project looks like, and start, getting press releases and all that stuff, assuming that the PEA looks good, kind of up and ready to go. So yeah, there's lots of different ways that we can shift the company and do things. And so we're constantly looking at all the opportunities.
Right, right. Well, it's unless you news release an NDA, that's kind of interesting. It's something that I've seen a couple of companies do.
No,
Um,
that's not something you should ever buy a stock for. If someone puts out that they're signing an NDA with a company, that's kind of I won't say what I can't say what I want to say, because we're in polite company. But yeah, that's the I can say that we have CAs in place, but I would never press release that. That's just silly.
yeah, that kind of defeats the purpose. But it's fine. You see these things, and maybe maybe they impress me because I'm new and sort of to the sector, and so inexperienced. And these things are kind of weird when you see them from outside. Maybe they're normal, but I mean, it gets you thinking. Anyways, Rick, what does success look like for this project? Like, if you had a magic stick and you could just fast forward to an alternative universe in which all your wishes were fulfilled,
Mhm.
what do you? I mean, what does this look like at the end of this show program?
Yeah, that's a great question. It would all come back to the stock price chart, really. I would say success looks like a discovery that is significant enough to move the needle as far as the share price performance is concerned, and hopefully in a way that makes everyone a significant amount of money that's in the stock. There's lots of companies out there that make, interesting discoveries, but ultimately the stock doesn't go up because of it. And so, is that a success or not? I value my performance and the company's performance based on what the stock price does. And ultimately, the success of this drilling program will be dictated by what we find and what the response is by the market. So, look, we're looking for big things. We're looking to find something that's major and something that's very attractive to other groups. From that would put us into a M&A type position. That's what we're looking for. And so anything that falls short of getting us onto those M&A lists, so to speak, I think is not going to help the share price. And ultimately, I wouldn't view that as a successful program.
So, a good answer. Okay, I don't think too many people think about it that way within the company. Although, in my opinion, they should, because that's what matters to me, if and regular retail shareholders. So, a good point. But I was also after sort of figuring out what does this look like geologically, and I mean,
Mm.
what does that type of deposit or project that interests the major? What does that look like, or mid tier? What does that look like
Mhm.
geologically?
Yeah, geologically, It's an interesting question. And I think it kind of depends on the market as well. Look, anything that would materially add to the future mining operation next door would obviously be valuable and attractive, right? If we were to find something that is from a grade perspective and a size perspective that's impactful to moving the needle financially on the mine that is being developed next door, that would be just a slam dunk as far as creating value. Outside of that, if you find something that's big enough where a standalone operation could be developed, whether it's porphyry or the skarn mantos, or any of those other types of mineral systems that I talked about earlier, that would be a big win as well. And so there's I think many different ways that we can fully bake this cake, and where we can all have a dessert at the end of the day that tastes good. And so we're agnostic. We want to find things that ultimately look important. And to do that, you got to start poking around. You got to drill some holes and see what the geology is telling you, and then use that geology to kind of continue expanding your level of understanding in that district and in that project. And hopefully that will lead you to those big discoveries. So, we want to take big swings here. So that's what we have to do. It's going to be methodical. I imagine there's going to be some bumps along the road. There's going to be some pain. I mean, obviously, this bloody void was a giant pain. And, c'est la vie. We move on, right? We drill the next hole and we keep going. So we'll get into it. I have no doubt. And so that's the exciting part, is to see what that next run of, the drill rig looks like every time it's pulled up.
But so let me tell you where I'm coming from with this question, is because I'm wondering, I'm obviously thinking about the potential mining operation next door, because if you were to have your ideal geological success, what would that mean for South 32? And would that make you more or less dependable on them moving forward? And just, would you generally depend more on them, I guess, is what I'm asking.
Yeah, most likely. So look, there's too many scenarios to kind of throw into that analysis for just a quick discussion. This is one where I imagine in Frankfurt we can have this discussion over a couple of beers, because it'll take a while. It just depends on what we have versus what they have at the end of the day, right? So obviously they're building a mine, and that mine obviously at this point is economic in their eyes and has a number of attributes that they like, and hence that's why they're developing it. The performance of that mine is going to be dictated on the grades that they encounter, all of those types of things. If we are successful and we find really good looking material right next door, and the sensitivity analysis suggests that the material that we have could be exploited more economically than the material on their side of the fence, well, then that could be accretive to them, right? And ultimately, that's the type of scenario analysis that needs to be run. But one, it requires us finding something, right? And getting more data on it. And then two, it also requires them to fully understand what they have as well. So there's two different trains going at the same time. And so it gets tricky. But ultimately, what we need to do as a company, and this trumps every scenario that's out there, this is the basis for every one of those types of scenarios. We need to find something, and we need to find something that has high grades, and we need something that ultimately can get to the size where it can be economically developed, whether that's as a part of the mining infrastructure next door, or whether that's a standalone operation that is supported by the economics of what we find. That's what needs to happen. You have to find something that's important, and you have to find something that's attractive, and the rest will take care of itself.
And to go back to that, depending on South 32 thing, is that a good or a bad thing? Maybe you can talk to me about your guys' relationship as it is now and where you think it's going to go. But generally, is it a good or a bad thing?
Yeah, it's a good relationship. Yeah, we chat. I think having them next door is fantastic. I mean, ultimately, you want to be in areas that are proving themselves to be important from a mining standpoint, right? You want to be out in the Carlin Trend in Nevada. You want to be on the right structural break in the Canadian Shield. These are areas where mineral endowments are prolific, mining operations are kind of long-lived, and where you know that the potential geologically is there. And so that's where people gravitate. We're in one of those situations, right? The fellas next door, they have a significant discovery, they have a significant development project. We're a part of that story. What kind of part we are in that story is yet to be seen. We have a lot of work to do ultimately to say what role we will play. But we're in the right zip code, right? We're in the right area, and we have the right ingredients. We just need to start making this recipe. And so from that standpoint, it's fantastic. Having infrastructure immediately next door, it lowers the bar on what it would take ultimately to get another project moving forward, right? Think about that economic hurdle that they had to overcome next door to justify development. Well, if you're adding to it, say we find something and ultimately it goes up through their infrastructure, the bar will be lower because of their infrastructure next door on that incremental ton that's being mined. If we find something that's big and ultimately it won't go through their facility, it needs its own standalone, the bar will be higher. But then again, if we find something that's significant, it could be justified. So ultimately what we find will dictate what the routes are.
And there's maybe also a bunch of mistakes that they can do that you can learn from, and then therefore maybe your project is again therefore more interesting to them because they already made those mistakes on their own project and they don't have to make them on your project. That's also something to think about, if that makes sense. Yeah,
potentially. Yeah.
I
mean, it's an exploration project. There mistakes abound. So
of course,
I've never seen a smooth exploration project. Well, sorry, I have, but they tend to be the ones that don't result in anything. Drilling is complicated. Drilling is painful. Generally, the public just sees the kind of assay results that come from it. But it's a process. I mean, you're drilling a 4-inch hole, from the top of the Burj Khalifa to the bottom of it, hoping to see what's in the parking garage below, right? So there's a lot going into that.
Right, that's right. Well, that's a good point because we on these type of shows, CEOs like talking about the good stuff. Obviously, it's what you come here to talk about. Let's maybe talk about the opposite side of that alternative universe too. What does failure look like? Would you recognize failure? Would you know how to move on? Like what needs to happen for you to maybe abandon this project? And not a fun thing to talk about, but maybe something worth considering.
Sure, that's the easiest one. Ultimately, the market will dictate what failure looks like, right? So if we find something, I'm quite confident that we're going to find something, Antonio. I have no doubts that we'll find something. It's just whether the market will ultimately see value in what we find and whether they'll want to continue funding it, right? The market makes clear delineations out there as to what is good and what is bad, and the what is not attractive doesn't get funded. And so that's how I draw the line in the sand. If you want to continuously throw money into an exploration project, but yet the market's not excited, the market doesn't see where you're going with it, what the upside is, well, then that's tough. And there's gyrations in the market too, right? So it's not the static thing that, this month someone doesn't want to write a check. They just might be tapped out or what have you. But if you go for an extended period of time and no one wants to fund your program, well, that means that your program isn't worth funding. So that's how you measure that one. That's pretty easy.
What is an extended period of time? How many drill programs is that?
A couple.
Okay. So because
yeah,
like 3.
I would say 3 drill programs. Yeah. I mean, think about it from a geologic standpoint. I mean, you're going for your best target first, right? And your best target doesn't work, well, then you're getting all of that data, you're assimilating it into your model, you're then recasting your targets based on what you know, and then you're going out and you're taking another look at it, right? If by the third time you do that, you're not getting the results that you expect, it's probably time to move on. Now, that's not saying that if you have a project that this big and you drill in one corner of it, that and you don't have success, that the whole project is worth abandoning. But would you keep drilling in that same area over and over and over again if you're not getting the geologic signs that you're looking for, right? So
that's right. Yeah, I wish my wife would give me 3 chances to put the trash out. She usually gets pissed after one. But it's, you say that your best target, but your best target is probably close to the historic drill holes, right? How far are you drilling from those historic drill holes?
Yeah, so right now, I mean, we're at the surface, we're 3 feet away, a meter and a half. But the angle of the hole, I want to say right now we're going to be about 60 meters away at the top of the carbonates. And so if you think about this is the historic hole, this is the new hole, it's at a slight angle. And so 60 meters spacing at the top will be wider than 60 meters once you get down to the bottom of the hole. So, kind of starting with a 60-meter separation, and it'll probably go out to plus 100 meters away.
Okay. So decent, I mean, a decent separation. What direction are you drilling in right now?
We are drilling slightly to the northwest. And the reason I'm hesitating is because the drill hole moves, right? So you start a hole in a direction and then it kind of does what it does. And so we started this hole, I want to say, at a 280-degree angle. So that would be just north of west. And I think it's kind of rotating to the north a little bit more right now.
Okay. Right.
Yeah.
Okay. Is that, I mean, I could ask why and you could answer, and I'm not going to understand it, so I'm not going to formulate that question that way.
Well, I can actually tell you the reason for it. There's 2 reasons. One, think about pressure. So you're pushing down on a rock and you're spinning it on the rod, and you're spinning it clockwise. And so you're pushing and you're spinning to the right, and so things will tend to over time slightly bend to the right.
Right.
The other challenge to that is if you go into a certain rock type, it might have like a structural fabric to it, or there might be some kind of different like stratigraphic planes or faults or things where it'll start to move the drill based on the geology. That's the other potential thing, right?
Right. But for next holes to determine the direction and the depth that you're going to be drilling at, you're probably going to have to see the first one and then go from there, I assume.
Yeah, it's like a bad golfer, right? So you take your first swing, you hit the ball, and you see where it goes, and then you kind of, bad golfers just turn their bodies to account for it, right? Rather than doing whatever it needs to fix it. With this, you just see where the first hole goes, and then you make an adjustment, and you try to hit your spot based on that same arc. So yeah.
I'm going to need a bull market in commodities before I can say if that's right or not, because I'm not golfing yet. But we'll see. And this is strictly the Sunnyside project that we're talking about. And that's what 99% of your focus right now, I assume. What's the plan with the rest of the assets? If, again, we talked about potentially a strategic or something along those lines, but do you have something else in the back of your head of what you want to do with those assets?
Yeah, so we're doing a couple of things. So right now in Mexico, we're looking at that PEA for San Javier and getting that out. And then ultimately we'll do something with that asset to monetize it in some fashion at the right time, whether that's spinning it out to our shareholders, combining it with other projects or other companies. There's a couple of different things that can go on there. So that's one strategy that's kind of being worked on. The other component to the corporate strategy are the projects in Arizona. Which ones do we want to put into the permitting queue for additional exploration, right? We are now done with permitting, and so we have that in-house expertise on permitting in that area, and we can drop another project into the queue, whether it be for a short-term program, a categorical exclusion, or for that long-term program, the environmental assessment type route. And so we're going through the projects and the targets and looking at what are the priority projects to get into the permitting queue. I don't want to have many projects in the permitting queue because permitting, you incur a bit of brain damage with permitting, and I've only got a limited capacity of brain cells left. So we will be very careful about which ones we put into the permitting queue. And then the third component here is what you mentioned earlier is, out of all of those projects, is there interest or appetite in the market for others to come in and work on those projects from an exploration standpoint and move them forward independent? Well, maybe not independent of us, or maybe they do the heavy lifting, right? And so that is another process that's kind of ongoing from a review standpoint.
Does the right time, because you mentioned monetizing the Mexican assets at the right time, does that depend on the political situation, or is that just a market situation?
The market situation, and there are different types of markets. So in Mexico, it might be the political market that's dictating some of the overall mining market type, inclinations. There's a presidential election in Mexico next year, and which way that election looks like it's going is going to dictate to a certain extent how excited people are going to become about Mexico. And I think everyone's excited about getting a new president in Mexico from a mining standpoint, because this current president put in a moratorium on staking new mining claims. It's not a very fun or favorable person when it comes to permitting mining development projects. So there's just a lot of headaches down there right now. So I think everyone's eager to see another president come into play. And if it's the right, person, then I think people could get really excited about Mexico again. And there'll be a big push into Mexico. And people will be looking for assets. And so that's a great position to be in if you have an asset and people are looking for a certain type of project and you have that inventory, then it could be very accretive. And so, that as well as just overall market sentiment, those are the two things that are really going to dictate what can be done down there.
Right. Why I'm bringing this up is of course because I want to talk about money. I want to talk about how your financials are structured, how much all that, holding all that is costing you. If you want to do work on it, how you're going to be financing it and stuff like that. So let's maybe take it sort of from the top and talk about let's talk about G&A first. Talk about the size of the G&A and how that's split between you can split it in two or in three: marketing, salaries, and then the rest of it. How's that split?
Sure. Marketing for us depends by year, and really depends on how much cash we have at the time that we're planning our marketing. I would say generally around $500,000.
Okay.
Plus or minus, might be 350, might be 600, but I don't think we've ever had a budget larger than 600. Maybe not even more than 500, but kind of generally in that range, which I think is pretty decent. It allows us to go to a number of different conferences, have a couple of different platforms engaged that kind of push out the messaging. Does all of the websites and social media and all that jazz. So I think that's a fairly decent number. I know many companies that spend millions of dollars on marketing a year. You can spend as much as you want on marketing, but we tend to focus on things that we believe work in getting our name out. And so that's the marketing side. The salary side, I would say we're kind of in the $1.5 million range Canadian, approximately, and that's including some of the guys that are probably down at the project as well. We got rid of our corporate office, which is saving us some money right now. We try to keep the corporate salary and spending side as light as possible, just because a dollar going into the ground is going to get us more payback than a dollar going into, say, my pocket. And then the what was the third component that you wanted to know about?
It's just basically all the rest. I mean,
Oh yeah, all the rest
water
is just
cooler.
dependent on, yeah, the others just depend on what we're doing from a work standpoint. So the holding costs on the project, yeah, the assets in the United States, I want to say, are probably somewhere around $250,000 US to hold the all the projects, and the Mexican asset is probably something on the order of tens of thousands of dollars a year.
Okay, so
Maybe,
it's cheap.
maybe it'll be less than 100,000, including all of the community type stuff and things that we have in place down there in the warehouses that we rent to hold the core and things of that nature.
Right, but so if I say under 2.5 million G&E, that's something I mean, you can keep yourself
Yeah.
under.
Yeah.
Okay.
Yeah.
Well, so 2.5 million G&E. I suppose it's not. How much money do you think you're gonna have left after this drill program that you're gonna finish? What did you tell me in about 9 to 12 months?
Well, we have to raise the money to finish the drilling program. So 16,000 meters is unfunded. So we have the money in hand to complete a portion of that, and then we'll have to go out to the market. Hopefully, once we have drill results out, to then kind of raise as we go. If I went out today and I tried to raise what we'll need to raise to get that whole program done, it would be too dilutive, and I don't think that would be the best strategy. So we're looking to kind of raise as we go and let the results kind of dictate what that next raise will ultimately look like.
Okay. So 16,000 meters. What did you say that you told me earlier? Let me just check. So about 300. I mean, 300 a meter all in is definitely, I mean, would definitely cover you. So that's $5 million, 2.5 G&E. So that's about 7.5 million, basically, that it's between now and the time you're finished with the drill program. It's more or less what you're going to need. Is that about right?
The drilling cost is in US dollars. So
okay, that's US. So it's not Canadian. Okay, right.
Yeah. Yeah. And then we have to make some payments to our joint venture partner related to the Sunnyside earn-in. So there's some additional costs in there, but kind of all in. I don't want to put my foot in my mouth here. It's going to be more than we have in our pocket right now.
Sure.
Let's put it that way. Yeah.
But
yeah.
I mean,
so we'll be raising money, at some point here in the near future, hopefully once we have results out.
It sounds like it's going to be north of 10 million Canadian total between now and the time you're done with the drill program.
Yeah, it sounds about right.
Have you thought about how many times you're going to raise it in, or is that also sort of a see as we go type of thing?
Oh, look, I think about it all the time. But similar to exploration, drilling, you kind of have to see what's in front of you, which requires you to get there. And so, when we go out to launch a financing, we'll see what the appetite looks like. That'll dictate how much we raise. Then how much we raise the next time will be ultimately dictated by what kind of performance do we show the market on the drilling side, the assay side, right? If we have some fantastic holes, then I think it's going to be very easy to raise that money. And I think that there'll be a lot of appetite out there for it. So hopefully the terms for those financings in the future will be great. And so that's the way I look at it. Ultimately, what do I feed the market? And the market will take care of me based on how I feed it.
Who do you think will keep financing? Look, the people that you have on the registry right now, I suppose you're talking to them every now and again. Are they showing willingness to keep writing checks?
Yeah, it just depends. There are lots of shareholders in Barksdale, right? And some of our big shareholders are quite chunky. I don't ask them all the time, like whether or not they would write a check in the next one. Like this it kind of gets annoying to big guys that write checks, like just constantly checking in. Hey, would you still write another check? How are you thinking now? Are you going to write another check? You ask when it's time to write checks, right?
Right.
In between, you give updates and you talk about the program and the weather and how they're doing on their jobs and their performance and all those types of things. So you get a sense right along the way, and then when it comes time, then you ask the question. And right now, I think the sense is pretty good. Haven't asked the question, so I hate to give you an answer of these guys are in, these guys aren't in. We'll see when it's time to ultimately raise some money.
Yep.
which is how we do it every time.
Well, it makes sense, and it's also it's a tough balance, right? Because you want to communicate to shareholders that, hey, just don't even think about it. I'm gonna get funding because I have, these and these guys lined up, and they've just told me whatever you need, I'm gonna cover you. But in reality, it's just not feasible.
And nobody says that.
Yeah.
I've never in my life heard a shareholder say, "No matter what, I'm going to cover you." That's just
Well,
a good investor never utters those words, right?
people on CEOCA say that. So
those people are full of, you know what?
are you? Well, here's one person who you can tell
unless
me.
unless they are personally writing the check, right?
Sure.
Yeah.
And that's where I want to talk about, because here's one person that you can definitely tell me whether they're going to be writing checks into this or not. And that's you yourself. Are you planning on writing checks into the financing yourself?
Probably. Yeah. I've never written a check into a financing for Barksdale, ironically. I've
Okay.
always bought on market, or I've exercised stock options. I usually am the one that gets clipped out of the financing because there are too many people that want to get in, and we have to make room for people. And so I usually clip myself out first, and then I'll buy in the market, or I'll exercise stock options.
Okay.
And for instance, this year I've written, oh geez, I'm at least $110,000, $120,000 that I've put into the company.
Okay.
Whether it's, I think that was all through exercise of stock options and then the taxes that I have to pay on exercising those stock options, right? So, but yes, I will be putting money in, whether it's exercising more options or writing the check into the financing. I will be putting more money into Barksdale.
What is do you know off the top of your head what your average cost of your shares has been?
I've got, I think, just a hair over 1.4 million shares, and I want to say my cost base is probably in the 40s, maybe
Okay.
the low 40s, like 42,
Right.
somewhere around there. I mean, don't quote me exactly, but somewhere around there.
Yeah. Yeah. So we have
So for instance, earlier this year, I exercised a bunch of stock options at 36.5 cents, and then I had to pay taxes on it. So I think that probably all in was a 50-cent cost base on those shares, 48 cents or something to that effect after paying the taxes.
Right.
So maybe 43 or 44 cents. So I'm not sitting on a 5 times right now. I'm still hungry, and I'm still looking to get this stock price as high as humanly possible. Because at the end of the day, I want to make you money, and I want to make me money. And that requires the stock price to go up.
That's right. So that's about you have 1,407,904 shares as of the last management information circular.
There you go.
So
there you go.
a little over $500,000 if your average is 40 cents, that's a little over $500,000 Canadian. No, it was actually closer to 600,000 Canadian. But you also saw that this year you're getting a $95,000 bonus. So that's about twice what you got last year, which is 50,000. How's that determined? I'm asking because I want to look into the future and think about it. What are you determining the bonuses based on?
Yeah, so our bonuses are based on a bit of a formula. So we have a compensation committee, and then what we do is every year we set goals, and there's kind of a formula as to what pays out and what doesn't, right? And the biggest component of that is the share price performance versus the peers. And so we have a peer group, 10 or 12 companies, kind of other exploration companies in the base metal space. And so there's an actual formula as to whether you're the number one name on that list versus I think maybe the bottom 4 or 5, you don't get anything for it. And so last year we had a great year as far as stock price performance was concerned. I think we were number 1 on that list. As far as our peers were concerned, it wasn't a great year in the market, but we were up 150% or something to that effect. And so that drove a lot of it. Other types of things, metrics that are in there, generally related to permitting, generally related to kind of achieving different outcomes at projects or what have you. There's a safety component, things of that nature. So there's maybe 5, 6, 7 buckets that ultimately dictate what the bonus could be from a percentage of salary type of standpoint.
Okay. Well, thank you for being straightforward and transparent with it.
So the bottom line is that if the stock doesn't perform well, then, the bonus isn't going to be great. And if there's no money to pay out bonuses, there's no bonuses getting paid. So
Right.
it's one of those types of things. And at the end of the day, I tend to put all of that money back into the company. So I got that 90,000 or whatever it was. So I probably got half of that in Canada, and then I put double of that at least back into exercising the stock options. So most of all of my bonus ends up going back into the company effectively.
Yep. So the reason why I'm asking that is exactly to see how aligned people are with their company. That's where I'm coming from. But you brought an interesting thing up, sort of an interesting idea in my head, because when you started talking about the comparables and sort of a benchmark of a basket of other companies, and people often said that you should look up to people who are a few steps ahead of you for your plans, and then look up to people who are a few years ahead of you for your goals. And who are those? Well, companies in your case, who are those companies in your case that you look up to in terms of your plans, and then in terms of your end goal? Like, where would you like Barksdale to be in 5 years?
Sure. That's a great question. So our peer groups tend to be companies that are at the same stage or slightly above us, right, from an exploration standpoint. So there's no producers, there's no folks that are in pure development phase, because that's not an appropriate comparable. So everyone in our comp list is a explorer, and their share price, we feel, is going to be dictated by the results of their exploration programs, right? And so, like you mentioned, there are those types that are ahead of us. So obviously, we haven't found anything yet, right? We're drilling those holes. We think that we're going to find something. We think that it's going to be great. There are companies in that list that have obviously already found things and that are kind of looking to expand them. There's other companies that are kind of in that, kind of initial exploration window. So there's a whole range of groups that are in there. What we try to do is just make sure that the comp list is appropriate. There are certainly lots of companies out there that just aren't doing anything, and they're not going to be a great comparable at the end of the day. You can load these lists with probably companies that aren't going to perform very well. But we try to find the list of folks that we think are truly comparable. So that way, at the end of the day, we can see how we do. And then ultimately, if we're the number one performer, but our stock is down 30%, what does that mean? And that's where, you could do great from a comp perspective, but bad from a return perspective, and you're not going to get paid for it. So these compensation committees are, I think, pretty important when it comes to junior exploration companies and the appropriate level of oversight that's needed with a board of directors, right? They can't just be little slush funds. And so, so we try to behave like a bigger company when it comes to going through those committee processes.
That's right. And I understand about setting the KPIs and all that. It does make sense. I was talking mostly about just business-wise, geology-wise, if you will. I mean, the type of deposit that you have, looking up to companies who have the type of deposit that you're chasing, but in a further stage. What companies?
Yeah, absolutely. Look, I do that all the time from a strategy perspective, right? All right, these guys are drilling this type of project. This is what they hit. This is how they moved forward. This is how the market responded. What can I learn from what they did, right? I've got a lot of friends out there that are CEOs at various companies, and I'm constantly talking to them to find out, all right, you put out visuals, for instance. What did the market tell you? And so, I've got a friend, Brandon McDonald over at Fireweed. I asked him, you put out visuals. How did the market respond to that? What did they like? What did they not like? How did you do it? Would you do it again? So I try to get as much information as possible on refining how we will behave once we get to a certain decision point.
Okay. Well, it's good. You get me thinking about Brandon's project. I'm talking to him before as well. Okay. Well, I think this about covers most of the stuff that I wanted to talk about.
Mm-hmm.
I don't want to push you. Like I was hoping to get a couple of company names out of you, but I don't want to push you.
As
But
far as what things that I like or things that I'm,
in
what
terms
kind
of
of company
stuff that
name?
you compare yourself to or hope to be one day. I mean, you
Oh,
gave me Brandon, but that's a compare, not a comparable, not
mhm.
not exactly comparable, I suppose. So,
Yeah, yeah. Well, look, there's certain deposits out there that are being drilled that are looking fairly good, and I try to look at what we have versus them on a um, what could it be perspective, right? I've got friends at Western Alaska that have a CRD up in Alaska, right? And I watch what they do. I watch what they're finding, how they're performing. Obviously our next door neighbors, South 32 have a big monster, and we have hopefully a nice part of that big monster. And so I look at what they do and what they're drilling. Pan American Silver down in Mexico has a big carbonate replacement deposit that they've discovered here recently, and they've been drilling that. I watch their results. I look at their data. I talk to those guys just to find out how it's going and what I can learn from that. There are some big carbonate replacement systems out there, and I'm just constantly looking at who's drilling those right now and what they could be. And we've got Peter McGaw as an advisor on the file as well, and I'd like to chat to him to find out what he is seeing out there, what people are doing, and kind of stay relevant from that standpoint.
right. Well, so I suppose a goal could be to have Dr. McGaw write a check into you that's a chunky one that could be, it could be a stamp of approval too, I
Yeah,
assume.
yeah,
So
yeah, yeah.
not much you can tell me there too.
Well, I
Either,
mean, whether
obviously.
people write checks or not, I'll never tell you. I mean, unless they tell me that I'm allowed to tell you. I don't like to kiss and tell and put people's names out there. It's just bad business.
I respect that. Oh, I respect that. I respect that. Okay, Rick. Well, we've been through a lot. What did you come here hoping to talk about, but I'm failing to bring up?
Just look, the exploration potential that we have at this property is fantastic, and I hope that the conversation we've had so far doesn't kind of cast a spell over what we're looking to do. Like we've talked about the ups and the downs here. I would like to say that there are probably more chances for ups than down. Otherwise, I wouldn't be pushing forward and I wouldn't be so excited about what we're drilling, right? So, talking about all the potential downside and things like that, that's just the reality of the situation. What we are looking for, obviously, is to make a big discovery, and we're looking to find something that is significant, that is valuable, and ultimately, we're looking to make all of our shareholders a great return. That's the goal at the end of the day. That's why I keep putting money into the company. That's why I'm so excited about this drilling program. So that's the number one overriding thing that I want to get across in this interview is, we've got some exciting times coming and coming soon.
I'll be definitely be looking forward to that. So thank you so much for investing your time in me today, and I'll be following along, and hopefully we can do this again soon.
Fantastic. Thanks for having me on. It was fun.